Established in 1875, the BSE is Asia's oldest stock exchange. For 150 years, it has served as the foundational pillar of the Indian economy. In fiscal year 2026, this century-and-a-half-old institution hit its highest revenue ever, over 5,100 crore rupees, and nearly doubled its profit in a single year. There is a common assumption that a stock exchange only thrives when the market is up and prices are climbing. In reality, the exchange remains indifferent to bull or bear markets. It collects revenue from market friction, regardless of which way the ticker moves. The modern BSE operates as a financial market infrastructure platform, a digital toll highway that has replaced the traditional floor of yelling brokers. The exchange functions as the house that owns the tables, collecting a fee on every hand played. This business model was formalized in 2007 during the demutualization of the exchange, which officially separated the ownership of the institution from the brokers trading on it. This transition allowed the BSE to operate as an independent transaction engine focused on maximizing the efficiency and volume of the network. As an independent infrastructure layer, the BSE now monetizes the financial ecosystem through 3 distinct toll booths. The first toll booth is the primary market. Before a company's shares can be traded, they must first pay to enter the exchange. Over 5,000 companies pay recurring annual fees to maintain their access to public capital. In fiscal year 2025, these listing services generated 224 crore rupees. The BSE holds a near monopoly on small and medium enterprise listings. As these smaller firms graduate to the main board, they generate higher compliance charges and become eligible for new derivative products. Each new listing effectively raises the recurring revenue floor for the exchange. The second toll booth is the volume engine, the secondary market, and equity derivatives. This chart shows consolidated revenue streams. Transaction charges, the cut taken from every trade, now account for 60% of total revenue, bringing in over 3,130 crore rupees in fiscal year 2026. The system averages 19,522 crore rupees in daily premium turnover for equity derivatives. Because the exchange takes a microcut on every trade, high market volatility and increased trading volume drive its highest profits. The third toll booth consists of the digital plumbing and data licensing that powers the wider financial sector. The Star MF platform processes 89% of all mutual fund transactions in India, handling more than 84 crore transactions in fiscal year 2026. The exchange also licenses the Sensex brand and 170 other indices to asset managers and vendors who require real-time market data to operate. By taxing the informational architecture of the market, the BSE extracts revenue from the data other institutions need to function. These 3 revenue streams are powered by a concept called operating leverage. Once the technology and regulatory frameworks are established, the day-to-day costs of running the exchange stay relatively flat. Processing 10 million digital trades requires roughly the same amount of overhead as processing 10,000. This leverage is why the BSE's EBITDA margins reached 63%. When trading volume surges, almost every additional rupee of revenue drops straight to the bottom line. The 150-year-old BSE brand has evolved into a highly regulated infrastructure moat, a position that is nearly impossible for competitors to replicate. The business model mirrors selling tools to miners during a gold rush, where the infrastructure provider captures value while the participants take the risks. In the high-stakes environment of Indian capital markets, the BSE wins by simply providing the infrastructure and owning the roads.